Hello, and welcome to the Green Profit Academy Pros podcast. This show digs into the challenges in growing a lawn care and landscape business while maximizing your profit. I'm Christine Era.
And I'm Steve Bousquet. We are the green industry experts in profit, growth, and leadership.
In today's episode, we're going to explore how working with a tax strategist can put money back in your bank account. And I am pleased to say that we have a special guest, Mary Pierce of Pierce & Company. I've known Mary for many years, and she is my personal and professional tax strategist. So I wanted to invite her here today to talk in more depth about what is a tax strategist and how can working with one can give us more money in the long run. So welcome, Mary. Thank you for being here today.
Well, thanks for having me. It's wonderful to be here.
So to start off, I just want to share with everybody, because I'm very familiar with who you are, who you work with, and what you do, but I know our audience isn't. So if you could just take a minute to tell us, who are you, who do you work with as far as clients, and what do you do for them?
Okay. So as you said, my name is Mary Pierce. Pierce & Company is the name of my company. I'm a CPA. I'm also a certified tax coach. I'm a profit first professional too. And we like to work with, we don't necessarily have an industry niche as much as a entrepreneur niche, that we work with business owners who have a business that's generally grossing more than $1 million in revenue and has gotten to the point where paying taxes is a pain point for them. And they're looking for more than just somebody to fill out the tax returns. So we like to say that we create strategies that create freedom in their business and then therefore their life.
Yeah, I love that, because there is a point, and this is what I realized, is there's a point where I needed somebody else to do my taxes. And I do have a background in that. It's not something I love. It's something I decided to leave behind and focus on what I did love, which was, more of the accounting side versus the tax side and the business strategy side, because that's kind of more of where I started in. And there was a point where I realized I need to stop doing my own taxes and I need to work with a real professional, like somebody who could bring things to the table, and we could start talking about, strategies that was going to make my money work more for me versus me just paying it out. And also, thinking differently, because I had grown to a point where my business was really turning into an asset, and I had to treat it, give it that type of attention, and working with a professional I knew would give that type of attention. So I'm really excited to have this conversation, because I personally have benefited, and several of our clients have benefited working with a tax strategist that has helped them, leverage better opportunities when it comes to their taxes. And also it contributed to scaling and growing their company as well.
Well, I'm honored to hear that. We've brought you value, and that's great. We kind of look at, it was when I learned to look at the IRS and their rules as a puzzle, or almost like a video game, where when you get the cheats and you know what to do, if you take this certain path, you won't die. If you go there, you will. The tax law is more like a game where the government has decided they want certain behaviors. They want people to hire employees, so they give you a deduction for wages. They want investments in oil and gas, so they give credits. They want something, they put something in the tax code. And there are so many things that are not really obvious until you start digging, that are completely legal and kind of fun to do. It's fun to figure out where we could invest money, do what the IRS wants, get a tax deduction, and still end up with an asset. And we're paying less taxes.
Right. And when you say it's fun to figure out, I'm kind of chuckling on the inside, because I'm like, that is not fun for me to figure out. I don't want to do that. But I am so glad that there's somebody in this world where it is fun for them to figure it out, because that's who I want to sit down at the table with and say, okay, here's the puzzle pieces. What's the best way to put this together to where I'm going to feel like I'm winning and, not losing? Because I feel like tax is always kind of like that idea of I'm just giving this away and I have to pay this and it's an obligation. And I know we want to pay tax because if we're paying tax, it means that we're making money and it means that we're making a profit. So I know that that's really important. So I think it would be great to explain to our listeners what tax strategy and planning is. So can you enlighten us on that topic?
Sure. Maybe I should start with what it isn't. A lot of people use the word planning, and very well-meaning CPAs. They use the word planning, and really what it means is that in November, they look at your books and they do a projection to the end of the year and say, this is what you're going to owe. That's great. It's necessary, but that's not planning. That's not strategy. Strategy is first understanding your client, because there are some things that everybody can do, but if you understand that a client, say, we have one client who's very, very generous and philanthropically minded. Eventually, we'll probably help him set up a private foundation. But for somebody like that, there are avenues you can go down. There are charitable trusts where you can get a tax deduction for putting your asset in there now. That's going to grow in value, that might someday be a problem with the state taxes. You get a deduction, you still have control over it to a certain extent. There's a lot of rules. And that's the beauty of having somebody, and it's not just us. We have partners who know how to follow those rules to a T so that you don't get in trouble. But so we start with, what does the client want and need? We look at their current situation. We start with minimizing taxes now, looking at where they're going to grow. And, not every strategy works year one, but they probably will grow into it or grow into something more, because as we save them taxes, then they've got more assets. They can invest them in their business that's going to make more money then. And again, they've got the money. That's one of the things I really love about the combination of tax strategy and profit first, is that in the past, I would tell clients, hey, there's this really cool thing you can do, but it's going to take a couple $100,000. And they'd say, I can't do it. With profit first, when they've got the money set aside, it's like, hey, you've got $1 million in your tax account. You can write the check to the IRS, or you can use that $1 million to do this tax strategy and save almost $1 million in taxes. And it just doesn't hurt as much as it used to.
Right. So what I'm hearing you say is tax strategy and planning, it is not just let me sit down and look at what you're going to have to pay in your taxes projected wise based on, what your profit and loss is showing, what your balance sheets are showing. So basically what you've earned and what you've spent year to year. It's setting down and really understanding each client, what their goals are, and what the journey is going to look like based off of their goals from where they're starting now. And I like that concept because it's meeting them where they're at and then helping them come up with a plan that's going to benefit them and align with their goals in the following years.
Yes. And another thing that we do as strategists is talk to our clients probably more frequently than a lot of CPAs do. A lot of people only talk to their CPAs at the end of the year when the poor CPA has 1 million tax returns sitting on their desk and all that poor guy can do is fill out forms. We want to know what's going on when a business owner says, hey, I'm buying another territory in another state. We're like, okay, that's great to hear. There's some ramifications there, and here's what we're going to do so that because some things you can only do during the year. Other things can be done after the end of the year. But if you're not talking to your client throughout the year, there's no way to know that. And it really kills me to hear after the fact that I could have saved somebody money if I didn't know.
Yeah. And I think that's a challenge is in working with clients around, understanding their numbers and what their business is trying to tell them, and then tying that to strategy, tying that to their goals. If we're not talking to them, we're out of the loop. There's
Right.
no way we can sit down in one conversation one time a year and identify and catch up on all the changes that are happening in the business, because it's past, it's done. They're like, oh yeah, well, back in March we had a cash crunch starting our season, or yeah, in June this came up and we're sitting there and it's October. And on the strategy side, we're going, okay, well, I wish we would have set up a call months ago, because then we can support them with all the changes, because business changes all the time.
Right. So here's an example of something that didn't go the way I wanted. Had a medical professional who decided to sell his practice. Got a fantastic deal, told me about it after he signed the contract. If he had changed one sentence in his contract to let this very special kind of trust first own the business and then sell it, he could have saved, he made about $7 million on the deal. He could have saved the $3 million in tax he paid. And his buyer wouldn't change it because they were afraid of it. Had he known in the beginning, it would have been part of the negotiations and it wouldn't have been blowing up the deal. And he made so much more money that he didn't want to change it. And we went to some other alternative things that he could use that didn't save him quite as much money. But that was like, this is why I wanted you to sign up for a planning package so that we would talk more often.
Right. Yeah, because if you look at the return on investment, which our listeners here, Steve and I talk about all the time, this is another opportunity of return on investment, right? Really understanding like what changes are happening, how it's going to financially impact our business or even us personally, right? Because the whole goal is to build your business as an asset and sell it one day, like this doctor did with his practice. So, it's missed opportunity and we're getting a lower return on investment. So it's automatically in my mind, I think, man, if I would have just signed up for, tax strategy meetings and reviews to have with you as things change in my business, how much would I have made based on what I would have spent just by having those conversations? That's automatically where my mind goes. But I know there's several entrepreneurs out there we don't all think the same. And there's some that are going to go, man, I didn't even think about that until they hear a conversation about it. So I think that that's a really great point.
Definitely.
So I want to talk about, how working with a tax strategist can help individuals and businesses maximize their tax saving and put more money back in their bank account. Because I know several of our listeners, they may not be working with a professional, CPA or a tax person, and there could be some missed opportunities just, because it's like they don't know what they don't know. So can you maybe give us some insights on when you work with somebody as a tax strategist, how on an individual basis and a business basis do you maximize their tax savings, and how does it impact their life?
So, we think of ourselves like guides in the jungle of the IRS and all those rules. And, what we like to do is, with anybody new, we're going to look at the past couple of years of tax returns to see if there were any missed opportunities. And I know I've thrown out some big numbers because, those are the ones that feel really great when you can save people a lot of money. But there are strategies that not everybody's aware of, or maybe some people are afraid of, that even aren't that expensive. If you have real estate, cost segregation. And if you want me to, I can go in more into that about exactly what that is.
Yeah, just give us a brief summary on what cost segregation is, because I know there's some listeners that, they don't live and breathe accounting terms like we do.
Right.
So,
And yeah, it's like, oh, that sounds really jargony. So if you think of, if you buy a business or a building for your business, normally you depreciate it over 39 years. If instead you think of this as like a building that you made out of Lego blocks, and you're going to take those Lego blocks and pull them apart, and you can separate them, and all the red Lego blocks, you could actually depreciate over 5 years. And the yellow ones over 7 years, and the blue ones over 15 years, and then the rest over those 39 years. What that does is give you bigger tax deductions in the earlier years, which is often when you need that. And most people don't keep buildings for 39 years. So yes, over the 39 years, you get the same amount of depreciation. But in the tax world, you always want to take your deductions as soon as you can and defer your income if you can, as long as you possibly can. So cost segregation is, and an engineer does it. The company we use has been tested by the IRS several times and has won every single time, because they do such a great job of detailing what it is. What they do is say, okay, this is wiring and this is plumbing, versus, hey, this is just a building. So it's breaking it down into smaller pieces.
yeah. And I could see, and I've had conversations with clients too, to where they're talking to me about something. And like we had a client recently go through an acquisition. So he purchased another territory in a completely different state. And one of the topics that, kind of came up, it was kind of, in the back of my mind. And I said, I would really like you to talk to, because, we don't do taxes at Core Growth Strategies. That's just no fun for us. So, which is why we create partnerships with, tax strategists that we trust. So I told him, I said, I'd like for you to talk to your CPA about opportunities with these, this acquisition. And is there any opportunities there to where you can benefit from how you file your taxes with the costs associated with acquiring this new business and setup? And because I know at one point, and like I say, tax laws, they change all the time. So I'm like, I can't tell you that this is matter of fact now, but I know we had worked with one client at one point where the expenses associated with acquiring the business were deductible in a certain way. And we had to then go back and reallocate these into certain, accounts and certain buckets. So that way they could really reap the benefit, when they sat down with their CPA and filed their taxes, it was allocated properly. So then it could be recorded and they benefited from, a tax savings. And they wouldn't have been able to do this if nobody had this conversation. It just would have been mixed in with all the other expenses, and it would have been a lost opportunity for tax savings.
Yes, how you characterize or even how you set up a deal to buy a company can make a big difference in your taxes, because a lot of times everything gets shoved into something they call goodwill, which is really just a plug. And all you can do with goodwill is amortize it over 15 years. There's nothing fancy. But if you can break the deal down better, it's a lot better. And you've just pointed out one of the reasons we partner with you guys at Core Growth is that having clean books and knowing that we can rely on them are very important. It's very important to us, because if I look at it and I can't trust the numbers, it's really hard to try and do strategy.
Yeah. And our team also, I know they're trained to reach out to the CPAs that we have strategic partnerships with and say, hey, this happened with this client. What is the best way for us to allocate this? What do you suggest? So we're coordinating and keeping an eye out, kind of like watchdogs on opportunities when it comes to, how they're expensing things or changes in their business. And we're bringing you guys in the loop as well as the client to say, hey, there should be a conversation about this. Let's get some deeper insight so we know how best to support you on both sides.
Yeah, it's great. So we were talking about the ways that a tax strategist can help. So understanding cost segregation. It's relatively inexpensive compared to many other tax strategies. The flip side is being aware of depreciation. Everybody tends to think just depreciate everything as fast as you can. There are actually cases where it doesn't make sense. I've seen it where somebody has taken a whole bunch of depreciation that they didn't need to, and the client had a loss that they couldn't even take. And so knowing all those rules about, there's special rules about losses with real estate that you have to pay attention to, and how can we offset that? And especially where you have the entrepreneurs who buy real estate and rent it to, so they may own it personally or in another company and they rent it to their business. Set up properly, you can really maximize those depreciation deductions by having the rental income set at the right amount. And by right amount, I don't mean one you make up, one that makes sense, business sense. I like to say nobody's going to tax jail. We are all going to do things within the law, and we know the law, so we're going to stick to it, but we know what to do to win the game.
Yeah. And I know I've started asking you questions about what if we do this or what if we do that when we're looking at, the year end and how it's going to unfold as we close out the year. And I've gotten some great insight on it. One of the other things when I did start working with you that was a huge benefit was you reviewed prior year tax returns for myself and my business. And, you're like, well, I'm going to review them just cause, and, it's just what we do. And one of the things that came up, because my husband was asking like, okay, so why are we working with like a tax strategist? Like, what's the benefit of this? And I kind of explained it to him. And within a short amount of time, I came back and I was like, yeah, so Mary reviewed our prior year taxes and found some errors. And we ended up getting almost $20,000 back in tax refunds because of how the taxes were filed. And so as soon as I told him that, I was like, hey, yeah, so, she found $20,000 for us. He's like, yeah, I like Mary already. So I know that was a huge benefit for us, and just having another set of eyes. And it was a simple kind of oversight, but it cost me $20,000 that I fortunately got back.
Yes. I had one recently that was similar where somebody had checked the wrong box. And so the client paid taxes on something that, they paid self-employment tax on income that wasn't self-employment income. So we have to amend.
And I would say related to that, that was another big eye opener, for me, is as the company grew, how I was set up as an entity. And I know kind of the entity structure in small businesses can be very confusing, and it's not everybody's specialty. And typically what we find in working with a new client is that they're not in the right entity structure. They're still in like a sole proprietorship when they should be in an LLC, or they're in an LLC, which is a limited liability company, when they could be filing as an S Corp instead and not being double taxed. And that was something when I got to a certain point in my business, and I have advised other businesses that are growing through these revenue tiers, is, you should talk to your CPA because you're paying double income tax by not being structured the right way.
Exactly. And there's a point at which, very often people do start as a sole proprietor, and it makes sense to a certain level because yes, you can switch to an S corporation. There are some costs associated with that. You have to have payroll. You got to pay yourself, and you have to pay yourself the right amount. So you have that. You have a separate tax return. So there's some complexity and some cost. And so if you're making $10,000 a year, no, don't try and do an S corporation. But there's a point at which there's no law. So it's more of a, what do we look at? I look at it as when they're making somewhere around $75,000 to $100,000 in profit a year, they should definitely be talking to their tax advisor to see whether it makes sense. Because what we do is a whole analysis and show them, if you do this, this is your net tax cost. If you do this, it's your net tax cost. And knowing the difference between all of the entity types, because S corporations are treated differently than partnerships.
Yeah. And I know when we ran the analysis on mine, it was about 50, I want to say 55 or more, between 55 and $60,000 in difference a year by me getting myself into the right structure.
Yep. It's a very important piece of it's like one of the first things that we look at with a new client is, do you have the right entity?
Yeah. So there's lots of tax savings there to where that can just put money back in their bank.
And you may only notice it the first year, but it truly saves you money every year because you're not double paying every year.
Right. Yeah. So it's like $50,000 a year just by getting in the right structure. I would sign up for that all day. And it was one of the things I was most excited about. And it happened in a year, and I've shared this story before, where suddenly I had a $56,000 tax bill. And I'm like, that's a lot of money, and I didn't have a giant company at that point, but I had made a lot of money from our structure, what we did, how we did things. And that was shocking, to me. And then having to figure out, well, where is that money going to come from? And this was right around the time that I started discovering Profit First. But it just really floored me to where, we were trying to save up for a house. And I'm like, well, now I have to pay $50,000. And what about our house fund? And, what about this? And what about that? So it really kind of opened my eyes as a business continues to grow, what our obligations are, how we need to raise our awareness and what we need to know. Because it's like I said, it's like I don't love taxes. It was something I did. And like most business owners out there. And I just did not enjoy thinking through, like, what are the right strategies, how, know all the laws, all these things. And it definitely, hurt me from not working with a professional until I was like, okay, now I really have to do something about this.
Right. And that's another benefit of working with somebody on a regular basis is our goal is never to have a client be surprised. Even, whether they use Profit First or not, they should know as things change during the year, how much are they going to have to pay and be prepared. And so there's never hey, congratulations, you made $300,000. You owe $100,000 in tax. I long ago, I had someone break down and cry in my office because they had no idea. And that was, before we evolved into meeting more often. And of course, Profit First helps too. But haven't had that in a long time. I
definitely cried. I think I cried in my kitchen a few times where I was like $50,000. So yeah, it was a heartbreaking moment.
Yes.
So I'm curious too, what are some of the common misconceptions about taxes that someone like you as a tax strategist can help, us kind of better understand, or, that we kind of get caught up in?
Sure. Well, I think one of the big ones is that people assume that only you got to be Warren Buffett to do this. And it's not true. Regular people can use tax strategy. There are some that work for me and for Warren Buffett, and there are some that only work for him. But most of them at some level can be used by anyone who's being successful in their business. So that's another one is that all deductions and credits are automatically added to your return by the IRS because they're looking out for us, right?
Sure.
Or even that software automatically knows. That's not necessarily true. We use software. It helps us a lot, but we have to be aware of a situation of the client and knowing that, oh, they do have real estate. They do have losses. Can they take this loss or not? If you don't do things right in your software, you can really mess that up. So you still have to understand that. So and we also know to look for things like, hey, next year, we're going to do this differently. And then it will be deductible differently, or more deductible, or deductible when it wasn't this year. So we can turn those things into real financial benefits. I already said the one about depreciation. That's a common myth. Always depreciate everything. I've had more clients than I would like ask me in December, should I go buy new trucks because I have a profit? My answer is always, if you need a truck for your business and there's a true business need, yes, buy your truck. Do not buy your truck for tax purposes. Ever.
Core Growth Strategies provides business growth management solutions through cloud accounting, bookkeeping, and strategic business consulting programs. Our team works with small businesses in lawn care and landscape and trade industries throughout the U.S. We increase our clients' business acumen by creating business performance transparency through financials and strategic advisement based on industry best practices and benchmarks. Our experienced team provides support, guidance, and coaching, thereby allowing our clients to connect with viable data and discover their own solutions. Core Growth Strategies programs and services are designed to get your business from where it is now to where you have always dreamed it to be. Visit us today at coregrowthstrategies.com and follow us on Facebook, Instagram, or LinkedIn. Don't miss our exclusive limited time podcast special. Just mention promo code GPA Pro to any member of our team during your complimentary consultation, or enter the promo code on our site when you sign up for one of our online programs. That's promo code GPA Pro. Yeah, and we talk a lot about that in the Profit First for Lawn Care and Landscape Businesses book about, the problems with equipment and what not to spend on equipment, and, kind of like that excuse of the tax, the CPA saying, oh, well, you're going to have a profit, so you should go spend X amount of money, and they go buy a piece of equipment that they don't even need, that's not even going to produce revenue for them. In the coming year.
And sometimes borrow money to do it, and then they're really in deep doo-doo.
Right.
Yeah.
And that's a typical, problem, especially in the contracting industry, is they love equipment. They buy equipment they don't need, new shiny trucks, heavy equipment, things like that. And I would have to say too, just out of experience, I think that, another misconception is that every CPA reviews your financials, like your books and how things are allocated, before they file the taxes. And I know that is not true. They take what you give them and they file your taxes, and you kind of get what you get based off of what you give them. And that's a question we ask is, does your CPA review your financial transactions? And usually it's this big fat assumption where they're like, well, yeah, I'm pretty sure that they do.
Of course they do. Yeah. That's very true. Another misconception is that, there are things that I've talked to clients about that I know are legal, that are very useful, and they've heard things.
Oh,
and
yeah.
But my hairdresser says you should never do this. And just because the IRS may not like something or is looking closely at it does not mean it's not legal and that you can't do it. Very often when the IRS has something on their hit list, it's because people have been doing things They've been taken advantage. They've been doing things wrong. They haven't followed the rules. But it doesn't mean that whole strategy is illegal, immoral, or fattening.
Right.
There are some that people hear about. And one of my favorite tax strategies is owning your own insurance company. It does take a certain level of profit, but if you're we have one client who his company makes like $10 or $15 million a year. He now owns his own insurance company. It's a great business decision because his insurance company will insure things that other insurance companies won't. It insures his warranty. It actually insures his deductibles on his outside policies. He was able to have a business interruption policy in place that covered them during COVID. And almost everybody in the traditional insurance industry found a way to not cover COVID closures. And so it's like another profit first account. That's another reserve that can help you out in a disaster. That company is in Texas. If a tornado hit them, they wouldn't die and go out of business. They would have to scramble and rebuild, but they could still do that as opposed to, oh, we can't do anything. We just don't, everything's gone. So again, it's important to work with the right people. And we're very careful about the partners that we choose because the people that we use for the insurance company actually won a case in the Supreme Court against the IRS.
Oh, wow.
Where the IRS actually got spanked and was told, stop going after these companies that are doing their jobs right. Go after the ones, absolutely chase the ones that are doing it wrong.
Right. Yeah. And I think that's so true. I've heard so many times where somebody will say, this is bad or this doesn't work because the people that they heard it from did something by not following the rules or did a poor job at executing, the strategy or the methodology. And they kind of like take it and they go, well, I'm going to do this with it and this with it. And that's not quite, how it's supposed to be done. And similar to the profit first system where one of the mistakes that, I list in the book is that they will, do their own version of profit first, which I'll, refer to as like the profit first buffet. And it's like, okay, so you're going to create your own small plates and manage them the way that you want to with these different allocations versus how the system is set up to help you succeed. And then they go, it doesn't work. Okay, well, tell me more about that. And then you find out that they're not following the process.
Exactly. It's like signing up for the gym and then complaining that you didn't lose weight. And the gym owner says, oh, well, how many times did you come in here? This is really bad. Oh, I didn't come at all. I didn't follow the rules.
Yeah. Yeah. And then, also some of I think the strategies that are outside the box and like the benefit almost seems like you can't believe it. You're like, no, that's too good to be true. Or that doesn't sound right. And it can be very scary changing, playing it safe, right? And not being able to really leverage those opportunities as you scale and grow your company, because it's almost being invited to a whole different table to sit down at. You're really in a different revenue.
Yeah, it really is. And I understand that because, we all have situations like that in our own life where it's like, oh, this really does sound too good to be true. And the answer in this situation or anything else, for me anyway, is get more information. Don't rely on someone's opinion. Find out for yourself.
Right. Because what works for you isn't, it's not always going to work for someone else. And what works for someone else isn't going to work for you.
Right. I mean, even where, the one client that has that insurance company, I wouldn't want him to go to all his friends and say, go do this, because they need to talk to somebody to find out if their situation warrants that, because maybe it doesn't. Don't know what his friends have.
Right. So is there any other kind of success stories that you can share and clients that you've worked with that could really, relate to our audience? Of course, we've got lots of contractors and other business owners that listen to our podcast. So is there a success story to where you have significantly increased a tax refund or reduced a tax liability? You've already shared some with us. And what was the situation? What was the savings? And how did you achieve it?
So yeah, I think I've shared probably the top few, but one that I haven't mentioned is if someone has sold a piece of property and has a large capital gain. Almost everybody's heard of the Section 1031, which most people call a tax-free exchange, which isn't quite true. It's deferred, so you're kicking the can down the road, but you're not paying the tax this year. But there are other things. Sometimes that exchange doesn't work because there are very restrictive rules about timing on that. And so if, maybe you didn't know about it, couldn't take advantage of that. There are still things you can do after you sell something and have a large gain. We had one client who sold his business, had a really big gain, and he was going to have to pay about $700,000 in tax on that particular gain. He was able to invest in an opportunity zone. And he spent almost the same amount. But what the opportunity zone is you're actually investing in some sort of building in a zone where the local government has identified that they want to encourage development. So now, and it's controlled by local government, so it doesn't always make sense. There's one in downtown Sarasota, Florida. There's one in downtown Tampa, Florida, neither of which are considered really blighted areas. A lot of them are. But the idea is the government has said, we want this area to be developed. And so we want to encourage people to do it. We're going to give you a tax credit to do it. And so they end up with a tax deduction in the first year, but they actually own something that over time will bring them a little bit of income.
Right.
As a matter of fact, I'm probably going to do that. I sold my house recently, and I'm going to have a little bit more gain than I can exclude as a homeowner, and I'd much rather invest it than give it to the IRS.
Right. Yeah, because then it's still your money and it's still out there working for you. Basically, it's not just leaving your bank account and it's gone forever.
Yes. It truly is investing, not just spending.
Are there any tax strategies that you can kind of enlighten us on that are relative to the construction industry? And I know you have several clients that are in the trades industry, in the construction. You've worked with them for years. Is there anything specific that they may not know about?
Well, if they're investing in buildings for themselves, then very often they don't know about cost segregation. That's definitely one of them. Depending on the size of the company, so a lot of contractors start out as sole proprietors. If you're a sole proprietor, you can employ your family members, well, specifically your kids. Again, lots of rules. Talk to somebody who can set you up to do it right and not get in trouble. But especially with kids under 16, you can strategize about how much to pay them. So here's what I did. We paid our kids the amount that would be right under where they would actually owe tax. So they paid zero. They had income, paid zero tax. Then they put that money in an IRA, a Roth IRA. So they had money to take out when it was time to pay for their college. So you have basically turned your kids' college expense, that's not a deduction for you, into a legally deductible expense. Again, rules, they actually have to work. You need to keep records. A baby does not count.
They have to be able to do
They
work
have to be
in the
able to do
business.
something. But it's not, they don't have to be able to do accounting. When my kids were younger, they cleaned the office.
Yeah. Right.
So
It could be
there's rules there.
filing,
Yeah. And
things like that.
if you're a sole proprietor, there's an even bigger bonus of not paying Medicare and Social Security taxes until they hit a certain age. So anybody with any kind of business entity could employ their family members as long as they have legitimate jobs. But it's even better for a sole proprietor. And a lot of contractors are sole proprietors.
Yeah, and I've also seen too that that they like to buy their own property, and the contractors and trade industry people that we work with. There's this point where they realize, well, I'm paying rent. I could buy my own building. I could buy my own property, and that is a goal for them. So they take that money that the business is making as a profit. And then depending on the strategy behind it, they go buy this property and they can turn it into where the company rents the property from their other holding entity as a real estate company, or the company itself owns the property and it doesn't have any rent to pay.
Yes. I like the two entities because of some of the passive loss rules. But, and probably a lawyer would suggest that you keep it separate for liability purposes. But yeah, a lot of them do like to do that. And that's where you can look at the cost segregation, how you set it up as an entity, strategizing on how much rent you pay. Because sometimes you think, oh, I'm not going to charge my own company rent, but you need the income to offset the depreciation. And the income on one side is the expense on the company side. There's all these ramifications of, oh, what kind of income is it from your regular business versus what kind of income is it from the real estate?
Yeah, I think there's a lot of opportunity there. And I mostly see them structure it as the two entities separate. And, they're having the company pay the real estate company rent. And I've even had to talk to clients to where they're like, oh yeah, we're paying this much rent. And I said, is that the going market rate for that rent? So we'll have conversations around that. We'll also talk about one of the common questions that come up from, being a business owner and paying yourself is, what do I pay myself? And this can have implications when it comes to tax strategy too.
Oh, yes. So the IRS has rules about reasonable compensation, especially for S corporations. We have a tool that helps us come up with the right number. So when you come up with the right number, you pay yourself that salary and you pay payroll taxes on it. When it is the right number, then everything else that the company makes as a profit, subject to proper business intelligence, is your money and can be taken as a profit distribution. Distributions aren't in and of themselves taxable. There might be situations in which they're not, or they are taxable. If you take too much money out of your company, then it can be taxable. But in general, if you're to that point where you have negative retained earnings, you usually don't have the cash to give to yourself. But it does sometimes happen. So again, that's where you should not have to, as the business owner, be worrying about basis and distributions and whether they're taxable or not. That's where it's really helpful to be talking to somebody who does know this stuff.
Yeah, and tell us more about basis. Like, when you say basis, what do you mean?
Basis is the way the IRS keeps score of what you put in your company less what you take out. So it's from day one, everything you put in makes it go up. Anything you take out makes it go down. Profits make it go up. Losses make it go down. So if you put in $100 and you make another $100, your basis is $200. So at that point, you could take $200 out. But if you take $500 out, you're in the hole. And it's possible that you have to pay the tax on the difference. So
okay.
It's really the way the IRS judges you on how much they can take more from you.
Yeah. And I feel like that right there could create a lot of confusion and misunderstanding on why someone might owe taxes or why they might owe so much.
Yes, I've had a few situations where I've had to explain to clients, hey, there's this thing that says distributions in excess of basis. Yes, you pay long-term capital gain rates on it, but you're still paying on it. So let's talk about a better way to pay yourself. Let's make sure that we're maximizing and strategizing about how much to pay out of what bucket, the salary bucket, the distribution bucket. And let's make sure your books are clean enough so that I can tell what your basis is.
Right. Yeah. And I think I've seen this happen to where they'll just come up with a number on what to pay themselves.
Or maybe they've heard, oh, it's just 50% of whatever I make. That is not true.
Right. And I tell them, okay, so we need to have the going market rate that you would pay somebody else to do your job. What does that look like? And I've seen partnerships where someone is, they're working there. One person is working there part-time and one person is working there full-time, and they're going, oh yeah, I should receive a full-time salary. And it's like, but you're only there part-time. Like, would you pay somebody to do that job when you're working there just part-time? And they're like, well, no, but this is my pay. And it's like, well, yeah, but there's rules and, that have to be followed, and we have to be careful here. And that's, I think, another misconception to where they'll either be paying themselves way too much for what they're doing or way too little for what they're doing.
Yes. And there isn't a rule of thumb. The tool that we use looks at it from 3 different points of view. One of them is, what would you pay to do everything? What would you pay somebody if you wanted to say, I don't want to work anymore? But there's also, we do a whole survey of all the things you do. Because when you're first starting out, you do everything. You're the janitor, you're the bookkeeper, you're the salesman, you're the installer. You're out there mowing lawns or plowing snow.
Right.
And so that's another way. And this particular company that I use, I think I mentioned it, has already been tested by the IRS. And the IRS is to the point now where they're like, oh, you use them? Never mind. We know you have reasonable compensation. But so it's really nice to know that we can rely on that. And, even your example about a partner, it avoids partners having a dispute to say, okay, this partner works 20 hours a week and does this. Okay, so that's what his salary should be, or her salary should be.
Yeah.
And it really can help avoid that confrontation stuff.
So what are some other ways that a tax strategist can help you understand, different like hidden deductions or opportunities in your business or personally that we haven't covered today?
Some of the other things that we make sure that we check with people on are, do you have a retirement plan? Especially with a small company, you can set up a retirement plan. They're called defined benefit plans, but don't worry about the words because it's complex and, it takes some time. But you can set up a plan where the owner gets the most of the contributions from the company and can put away a lot more than your regular old 401k numbers, which are maxed out in the $20,000 this year. So that's a big one. It doesn't work as well for really big companies. For a much bigger company, sometimes when the owner wants to retire, he could actually sell to the employees and create an employee stock ownership plan. One of the big grocery stores around here is actually all employee owned. That's what the owner did many, many years ago. We already talked about employing family members, cost seg, opportunity zones. That the thing I talked about with the medical professional who sold his practice is called a deferred sales trust. There are many other kinds of trusts, and a trust can be a scary word, but there are points when it really makes sense. I don't want to go and tell someone to make a whole bunch of trusts just because it's really cool and I look smart by saying, go do this.
Yeah.
We make sure that it's going to be the right thing for them. And we are always looking at new ones. And there's solar credits. There's a lot of credits out there right now. Obviously, electric vehicles are one of them. Although right now Teslas don't qualify.
Yeah, and it's interesting because in the lawn and landscape industry, they're really pushing, for to get rid of gas, right, with equipment. And there has been just huge conversations about it. There's larger companies out there that have replaced all of their equipment, with electric equipment and got rid of their gas. And they've got solar trucks and they've got, solar on their property and charging stations and various things like that. So there are industry leaders who are rolling this concept out. And then there are smaller companies that are slowly, replacing kind of divisions and different services with their electronic, kind of powered equipment that they have in their business. And I know the state of California is one who now, as of this year, you cannot have any gas powered equipment. And that was one of the things that I thought about was, how is this going to impact this industry? And are there tax strategies around this that they could leverage as they move their company from gas powered to electric?
Yeah, that's really interesting. There's none yet that I know of for specifically moving your equipment there. That's going to take some lobbying, I think, with Congress. Maybe get Elon on that.
Get him on something. Yeah. So, and I also like the retirement, like how to fund it. Cause as entrepreneurs, and I know I was guilty of this, I was own my own business, single mom, all my income, every penny counted. Right.
Mm-hmm.
And one thing that I constantly sacrificed was in my early years was putting money into my retirement plan. And there were even times where I'd put money in and then I'd have to take it back out and then put it in again. And, it was just that just really tight budget that I was living on. And I think that lots of entrepreneurs do this to where they sacrifice their retirement and then they think, oh, I don't need to retire. I could just sell my business one day. And then they get the sad reality check that their business isn't worth anything.
Yes, very true.
So I love that there is some, enlightenment that you can get from working with a tax strategist on what do we do to close that gap from what I paid into retirement versus what I need to pay into retirement, what options are out there, what programs, what do you have to set up? And I also, love that. I know working with a tax strategist, they can help you identify the changes you need to make to ensure your business is an asset.
Very true. And, the bonus on that retirement plan is that it's double. It's helping them. I mean, our goal isn't just to save taxes, but to help our clients get the freedom they want, which eventually is usually spending less time in their business, whether they keep it or sell it, but funding their retirement. And hey, let's get a tax benefit where we can too.
Yeah. So if somebody is either currently working with the CPA or isn't working with the CPA, how would they get started in connecting with someone like you? Like, what would you suggest they do?
I think one thing to do would be start with your current CPA and maybe ask them a few questions like, okay, I have a property. Can I do cost segregation? Do you have any ideas about, have you looked at, should we be taking all this extra depreciation this year? Does this make sense? Do I need a retirement plan? I don't have one. But probe with your current CPA. And some of them are, there's some of them that are just in the mode of they're so overwhelmed they can't stop and think. And I used to be there. Anybody who's ever done taxes has been there. Mm-hmm. And it's a bad place to be because you walk away feeling bad that you can't help your client. We're actually, one of our goals this year is to help other CPAs learn more about tax strategy and maybe even connect them with people who, because not everybody wants to do this. Not everybody looks at it as a puzzle, but if they could connect with somebody. So we're trying to reach out to the CPAs to help teach them or connect them with more people like us, because there's a group of us that have formed that we're trying to do that. And maybe just Google tax strategists versus tax preparer, because there's a big difference, as we already talked.
Right. And not every area is going to have a tax strategist versus just a typical old CPA. And,
right.
And I think too, some of us, and, just being in this industry for so long, I know that there's some clients to where we put out there, like, hey, this is how we help people, this and that. They don't read that information. So they may not know, like, we help them that way, or we're interested in helping them that way. And we won't know until they ask. Mm-hmm. And, so we typically try to ask them. So your CPA may not know you want this insight because you're not asking.
Right. The worst thing that could happen is if your CPA knows all this stuff and you end up leaving them because somebody else tells you about it and they actually did know it. So I'd start with asking your current person, because I know it's painful to leave someone. It's really hard for a client because they lose a lot of all the stuff they've poured into that CPA's brain, and it's a lot of work.
Yeah. And I think it's never a bad idea. And I tell people who, come to us, I'm like, talk to a couple people, see who's the right fit. I've had clients ask, why should I work with you as a coach? Or why should I choose your core as an accounting business? And, and I say, that's your decision, right? We need to talk about, like, how do you want to be supported and who's the right fit for you? And that's the conversation that we have is what are you looking for? And am I the person you're looking for? Because this is how I'm going to work with you. And this is what we're going to require. And if that doesn't sound good, then, talk to other people.
Keep looking.
I would say talk to a couple. I don't cringe when somebody shows up and says, I'm going to talk to this other person and I'll get back to you. Great. Go talk to that person. I want you to know that you're the right fit. And I also try to relieve them as guilt to where they feel like tethered to this professional they're working with. And, I have to coach them through saying, look, you don't owe them anything. If you're in this place where you don't feel supported the way that you need to, maybe it's time to move on. It's business. It's not personal. So, also I think entertain those ideas. It never hurts to talk to somebody else and see what opportunities are there. Is there something you didn't know? Is there a better way that they can support your needs?
Absolutely.
So if someone wants to get a hold of you, Mary, and I'll include this information in our show notes, what would be the best way for them to do that?
Our website is pierce.cpa, not .com. And there's a calendar link that you're going to send to folks. To be honest, I don't think it's active on the website at the moment, but I'll fix that. And our info, you could email info@pierce.cpa. But honestly, booking a 15-minute call is probably the best thing, because in 15 minutes, we can figure out whether we want to move forward to investigate whether we want to work together.
Yeah, I was just going to ask you, if they booked a 15-minute call, what could they expect?
We're gonna explore, first of all, does it make sense? Because we know what we do and how we like to do it. So I'm try to be very clear about this is what we do. And these are the people that we serve best. Hey, it looks like you're going to fit. Or sometimes we say, no, I don't think it will fit, but maybe I know somebody who does, that might be a better fit. I always try and help them out, but it'll be a fairly quick rundown of where are you? What are you looking for? Real quick overview of how we do it. Does that sound good? Okay, let's move forward.
Yeah.
And after that, we can dig a lot deeper.
Yeah. Excellent. All right. Well, I want to thank you, Mary, for coming on the podcast today, sharing your insights around tax strategy. I feel like this is a topic that working with a tax strategist has so much, potential and opportunity, and that there is, an alternative to just a CPA. The common concepts of a CPA, there's a lot more to people who do file taxes and how they can support you in your business.
Well, thanks for having me.
Well, thank you to all of our listeners for tuning into this episode, and we hope that you found the discussion insightful around tax strategy and the opportunity there. Don't forget to subscribe to our podcast, and we will see you next time.
Thanks for listening to the Green Profit Academy Pros Podcast,
the show that digs into the challenges of growing a lawn care and landscape business while maximizing your profit.